The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
One of the hallmarks of the market as of late as well has been the pressure that we've seen coming through in terms of commodity prices. And this week we got a lot of color coming from the miners here in Australia with these quarterly reports. Today, it was mineral resources. Quarterly production dropped 12% on the previous quarter because of lower mine development at Wadinga and Mount Marion. However, the company maintains it's on track to meet its production guidance for FY24, with volumes increasing by 9%. So MinRes shipped its first Onslow ore in May 2024 ahead of schedule, with iron ore quarterly shipments up by 6%. And so far today, the market is loving this one, sending shares about 6% higher. So let me get my guest's view on our stock of the day, MinRes. Jonathan, I'll start with you.
Okay, so MinRes always been a solid company. I always flag it in there with the BHP, the Rios, the FMGs. It's just one of the big four, one of the steady as she goes. Problem is, it's because it's a little bit diversified. Sometimes it's kind of hard to predict where it's going to go. So sometimes it's rallying on the base of mining services. Sometimes it's rallying on iron ore, and sometimes it's falling because of lithium. Yeah. So what we've seen is that it's been falling on the back of mostly lithium and iron ore, and we've just been pummeled so much. The sentiment in the lithium space is so poor at the moment, but the thing is, it's a well-run company, tight-run ship. We're at the bottom end of the range here, and it's a very volatile stock. I think there's a buy opportunity here.
Wow. Okay. We're calling MinRes a buy. You?
Yeah, I'm gonna stay with that. I'm gonna say it's a double buy. Absolutely. I think overall MinRes is a mixture of, as you say, mining services, and I like to call it the old world versus the new world. Lithium's the new world, old world is iron ore. So
it's got a hand in each pie.
It's got and it does have and absolutely, Jonathan's absolutely right. That lithium side of things has really dragged down. They were actually overall, they reported 487,000 dry tonnes of spodumene, which was at their overall. They guided to 460,000, so at the top end of that range. So they actually beat expectations on that. And then the overall, they did quite well as far as they're getting around $970 a tonne for that spodumene. So it actually represents about 15% over last coming couple of months. So it's actually beating some of those metrics, and hence why the market is really rallying on that today. They only shipped around about 18 million tonnes of wet iron ore. Now Fortescue does 190 million tonnes, so you can sort of see the difference inside of that. But they also, the company agreed to that they're going to sell some road haulage businesses that they got there. That's going to give them about $1.3 billion in capital, which is going to keep the lights on and things like that going forward. So overall, I thought it was a good result. The markets liked it. It is down, and look, technically on the chart, it does look like it's probably at sort of support levels down there as well. So it doesn't look too bad. I've got clients, you can sort of see that 55 level sort of sitting there quite nicely. So hopefully that will continue to support the share price. It's been a hard one. We've got lots of clients in this one which are long and wrong at the moment, but we still feel that overall iron ore, if it stays over $100, it should do well. And if the lithium price starts to
recover.
The
other thing I noticed reading through its ASX announcement, maybe we'll touch upon that later, is that it's looking to get into energy in the Perth Basin. So yet another sort of bow that it can draw upon, but it is waiting for a WA government agreement for partial export to support the environment. So it wants support from the WA government for this Locklear conventional gas project. Is that a positive for you in the future, that it may have gas exposure as well?
I'll have to live with that. I haven't looked up that.
Yeah, okay.
Yeah, no, definitely. I think any kind of string to the bow is good. I think that it needs to be well run. So that's the first thing. And this company is actually very, very well run. It is seen in the market as one of those businesses where it has got a lot of credibility with management. So, that kind of thing. Any kind of string to their bow, I think it works well. As long as they're getting the right prices and it works, I think that's not a problem. But overall, it really is that iron ore and that lithium that's really hurting them. And if iron ore staying under $100 or 99 last night, it sort of gets people a little bit scared and a little bit skittish. around what's going to happen going forward.
Well, it's got a rig deployed to the North Erregulla appraisal well to get going in August. There you go. That is the stock of the day, Mineral Resources.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.